Good afternoon, everyone. In today's video, I'd like to focus in on trying to find particular stocks where we have edge opportunities setting up, particularly given the strength that we saw in the S&P, all-time highs on Friday. Same thing with the Nasdaq, trying to see, hey, does this strength continue headed on into the next few weeks, months, however long it is? And if we do get a pullback opportunity, what are the stocks that I should actually be focusing on? That's what the goal of today's video is, to try and find, at least using Friday's signals, what are the stocks that are screaming to us that, hey, we have a bullish bias, we have data supporting the overall move here, and we have strength in the broader markets? So let's get started. The first scan that I'm going to be using is our bullish squeeze signal scan. All Volatility Box members, you should have access to this. It's free inside of the Squeeze course, and you can download that at tosindicators.com/squeeze course. If you come in, you can find all of these backtesters inside of our downloads. So now coming back in, let's start with Agilent Technologies first, and I have our Squeeze Signals Backtester loaded on. So we're going to focus in on bullish opportunities given the bullish strength we're seeing. Inside of Agilent, 7 winners, 1 loser every single time we've seen this signal trigger over the last 5 years. So that's a good sign. I think that bodes to the idea that the signal is a good predictor of the squeeze firing long. You do have earnings coming up. The other thing to point out, the average winner and the average loser are more or less the same. The average winner is actually greater. We don't see this happen too often, so Agilent would be one of those stocks that is on my radar and on my watch list. Now, if we keep moving down this list, the next ticker we have, Akamai Technologies. We made a video about this earlier this week. There was an outage. We saw some weakness in Akamai as a result of it. Now we have it on our squeeze signals list, but not really anything compelling from a data standpoint, right? 2 winners, 1 loser. A, not enough data points, but B, even with that, you have 1 loser here. So 2/3 of the time, 66% win rate, where your average loser is bigger than your average gain. So I would skip Akamai Technologies. The next stock we have, American Express. Now, American Express, we did see that same strength. We made all-time highs. However, that was very quickly sold off. Earnings are behind us. We do have the squeeze, and we're looking for the squeeze to potentially fire long. And out of the 8 times that this has happened over the past 5 years, 6 times that squeeze has fired long for an average gain of 4%. However, the 2 times that did not happen, your average loss was almost double, a little bit more than double that. And I think that would be my cautionary sign here. So definitely a pullback inside of American Express. Our bias for the signal is still long, but our risk is very much there, and we'd like to mitigate that risk by waiting for a pullback. Now, next up, let's keep going down the list, and we're just looking to try and find places where we have more winners than losers, and we have a decent statistic pool to try and judge this off of. EXPD does not meet that criteria. Red label makes that pretty obvious, so we keep coming down. NRG, same story. OMF, 3 winners, 1 loser. Average winner, 10.64%. Average loser, 10.66%. So more or less the same. Definitely much more volatility, but in case you like the volatility or OMF is a ticker that you prefer to trade, well, there we have this setting up. So OMF would be another ticker you could potentially add. Then ORMP, 2 winners, 0 losers. Pharmaceutical stock, not really a huge fan of that. I wish we would have had more than just 2 data points here, considering it's a pharmaceutical stock, but nonetheless, only 2 and 0, 8.88% winner. So in terms of more winners than loser, yes, but this is not really one that I care to play, personally speaking, based on the pharmaceuticals. Now, next up, we have VRT. 2 winners, 0 losers. Average gain is 4%. So interesting from a data perspective, but you also have earnings coming up right around the corner. So one I personally would skip. And then finally, WAB, more losers than winners. Actually, no winners at all. 0 winners, 3 losers. So much so that you may actually be looking at this as a potential bearish move, looking for the squeeze to fire short, but you have earnings coming up around the corner as well. So from this entire list, the best 2 candidates, I would argue, were American Express and Agilent Technologies. Agilent probably with the lead here in terms of which was better out of those 2. Now let's move on next to our Slingshot Squeeze indicator, along with using the backtester for that signal. Our goal here is again to try and find our bullish scans, try and use that to narrow down which stocks we'd like to actually focus in on, which stocks make our watch list, and which stocks are we looking to monitor as we continue to see whether the strength progresses in the broader markets or if we start to see a sell-off in the overall broader markets. Now off of our Slingshot Squeeze, the first ticker we have, Elastic. There are 2 winners, 1 loser, so the data isn't too compelling. Average winner, 6.93%, but average loser, negative 11.38%. So Elastic would be one that I skip. Next up, we have Canada Goose. This looks a bit better. 2 winners, 0 losers. 12.77% is the average winner. You still do have earnings around the corner, but here we're looking at the squeeze to really slingshot and ultimately fire long, or at least ride some sort of momentum as we head into earnings. So Canada Goose could be another interesting one to add to American Express and Agilent. Now coming straight down, Infosys, we can skip that, no data. MP, 1 winner, 1 loser, we can skip that, nothing too compelling. Roku, 3 winners, 1 loser, looks compelling initially. However, with the 12.6% gain on Friday, I think that A makes it hard to buy. B, our average loser here, negative 18%. So both of those signs would be reasons to wait for a pullback here. You also have the Keltner channels telling you that, hey, we're slightly overextended, you're near previous highs. And so while Roku may have all the strength, while we may use earnings as the catalyst to break above all-time highs, this is just not one that I'm interested in playing for the squeeze at least. Now, finally, we have Smartsheet. This looks a bit more compelling with 3 winners, 0 losers, average gain 11.16%, average trade duration 20.67 days. We see the signal printing, earnings is still a bit of a ways away. In terms of the overall broader technicals here, using our most recent swing high, swing low, we've gone up to the 200% extension, came all the way back down to the 50%, bouncing from there again. So really looking for the strength to continue, near-term target 77.96. So from all of the tickers that we've looked at today, the ones that would make my shortlist personally, Smartsheet, Canada Goose from our Slingshot Squeeze table, and then Agilent and American Express from our Squeeze Signals table. So 4 tickers, 4 places where if we do continue to see the same strength in the overall broader markets, but get a better opportunity to try and enter at a pullback, or if we see a slight bit of sell-off here, I think those 4 stocks would be on that short list for places where I'd be looking at for trade opportunities. All right, I hope this video was helpful for all Volatility Box members. Again, you can download both tools on our Squeeze course website, along with actually watch the tutorials and understand how the indicators are made, along with the backtester. All right, take care, everyone. Good luck trading. Hope you have a wonderful week ahead, and we'll see you in the next update.